I'm Jay Taylor. I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. I'm also the host of a radio show called Turning Hard Times into Good Times. It airs every Tuesday at 3 o'clock p.m. Eastern Time, 12 o'clock Pacific. And I'm here in Vancouver. It's November the 16th, 2019, at the Metals Investor Forum. I'm really pleased to be with an old friend, Dale Ginn. He's a geologist and is heading up the exploration efforts at Gatling Exploration. And Dale, welcome. Thank you. I'm glad we could
thanks
meet
for
up
having
again.
Me, Jay, for sure.
I've followed your career to a great extent, and most recently, before this life, at Bonterra, where you had a very successful exploration program, and I never really, you left before it was completed by a long shot. I was really excited about it because I saw that you stepped out over a long distance. We're still getting good results and getting good results at depth, and it was just really a great story, and never really heard the end of it, really. I'm not really sure, because you left before it was finished, and I'm not really sure what happened. But I'm glad to see you working for Gatling on a project called the Larder Gold Project, just across the border from Quebec, along some very prolific gold-bearing structures. So talk to us a little bit about Gatling, and what do you have there now, and what do you think you can do? What sort of target do you have there in mind? Maybe the dimensions of your exploration program.
Sure. I mean, basically we start with a collection of deposits that were discovered and worked on over the years, like since sort of the 1940s. Mm-hmm. There's 3 deposits, and they stretch over about a 5-kilometer distance, located right on the Kirkland-Larder break. Mm-hmm. So prolific, gold-producing break. Most people know about. And these deposits are close enough together, and there's enough similarities and kind of geology in between them that tell us that really I think these are a single deposit, or at least they could be treated as a single mm-hmm. deposit, but then you'd have sort of better lenses or
higher grade
pockets of higher grade in distinct areas within that. And our goal basically is to find more of these lenses within and kind of join these lenses up into what really should be treated as a single deposit. I mean, mm-hmm. I've seen this before. I worked in the Red Lake district, and when Placer Dome got together with Goldcorp, that all of a sudden it became one deposit, when before it was,
several
completely separate ones. Yeah.
So you had right to your east the Kurt Addison mine, which was, I think it was a Kurt Addison mine.
Yeah.
There was 10, if I remember right, something like 10 million ounces at
10.5 million.
10.5 grams or 10 grams, something like that.
I think it was, even around 12 grams per ton.
12 grams per ton. What kind of grades are you looking at now with your current work? And I understand you will have done something like 35,000 meters this year, planning 100,000 meters next year, a very aggressive drill program coming up apparently. But what kind of grades are you seeing now? Are they anything like what was it over at Kurt Addison, next door neighbor?
Yeah, I mean, in some of the new areas that, our latest drill results, we've had, 5 meters of 11 grams per ton, so you have good width, good mm-hmm. grade. We've had variable intersections anywhere from a couple of meters wide up to 40 meters wide, mm-hmm. and good, well-distributed gold and mineralization like throughout. So it's variable, but overall we're shooting for a kind of an 8 to 10 gram overall mm-hmm. grade.
Overall grade. So what I'm trying to understand is you have these 3 targets. Do you envision mining between those targets, or are they going to like 3 separate mines perhaps, and they would be underground with vertical with shaft entrance, or?
Well, the way I would see it developing is really you have 3 separate deposits only because that was part of the land holding where the land holdings were split up.
Right.
And that's where the information was. And we're trying to fill those gaps of information. We believe there's many more lenses within
between those three. Yeah.
And so, when these deposits tend to have great legs to depth. So likely you'd start off possibly with a combination of a decline and a shaft situation, and you know, be mining kind of in an efficient mechanized way, like 3+ meter wide widths and good grades, but accessed likely through declines and a shaft potentially.
Could you talk a little bit about the share structure? Does management own a lot of shares in this company? And because I like to see the shareholders' interest aligned with management.
Well, we own as a group about I'd say about 8% now, and that's going to grow. We're going to add to our position for sure. You know, it's not as much as we'd like, because this was spun out of another company, and so you had those past shareholders, right? But yeah, we're going to grow our position for sure.
And what's 100,000 meter program 2020?
Yeah.
What can you tell us about that, and what would be the objectives of that? Just to fill in, I suppose, those spaces that you talked about.
Well, it's. I mean, we're already having good success in getting results between the knowns. So we're in the unknowns, and what we'll do from there is we'll work our way up and down from those new intersections and define new lenses, and then stretch out some of the lenses that are already there, and effectively kind of bring a 5 kilometer picture together, where you know, maybe at the end of next year we might be in a position to think about, you know, actually putting a pin in as far as resource count. Yeah.
Right. What do you think you would really like to see there in terms of numbers of ounces that might attract, you know, one of the bigger players there? What, 3 million, 5 million, what?
Well, I mean, from our experience now with dealing with some of these bigger companies, they need to see their way to 1 million ounces plus. You know, if they see 1 million in the near to midterm, that'll attract them. But yeah, they want to see kind of in the longer term, probably 2+ million ounces. I mean, you got to remember, in that area, there's a number of mills within trucking distance that are quite hungry, and possibly some more mills to be built that are going to be hungry. And that means we don't have to have all the ounces right away. They can come over time.
Very good. And how is the funding situation? Are you funded for next year for the
we're funded
program?
For partway through next year. We'll, you know, it'll be success and market driven as to whether we raise more and when we do. But we are an exploration company, so with an aggressive drill program. So at some point we'll be raising some money.
Very good. So in terms of catalyst for shareholders, I guess you just want to keep watching for your drill results.
You'll have
them coming out on a fairly regular basis, I guess.
Yeah, we're going to try to keep everybody well informed as to the progress in terms of drill results. We'll be putting out maps, longitudinal sections, so people can kind of calculate on their own where we're going. And so it's a combination of results, and I think you'll see some attraction, you know, on other strategic type investors, I would say.
Good. Very good. Well, I think it's a very exciting story. I think it's a very possibly a multi-million ounce deposit in the making, with good grades, and in one of the best places to mine, with all the infrastructure, with the hungry mills around. All those are factors that reduce the risk, in my view. And you know, your drilling success, your past success, is another part of that in my thought process anyway. So I want to thank you very much, Dale, for taking the time
All right. Well, thanks,
to chat with me again.